All right, let's get going. Welcome, everybody. Happy to have you all here for this month's Perspectives Live on open banking and moving from a buzzword to a budget line. I'm excited for this conversation, and with me I have Arnav Jain, consultant with us here at SRM. And Arnav, say hello to everybody.
Great. Hi, everyone. Appreciate your time and looking forward to a great discussion that hopefully demystifies some of the things that are going on in open banking right now.
Yeah, just a little background on Arnav. Again, he's a consultant with us, focusing a lot on our technology consulting, payments, go-to-market strategy, AI, and has been with us for a few months, but previously a consultant at PwC, where he led M&A and technical PMO initiatives within their financial services practice. Very much an AI and data evangelist, previously driving AI initiatives at PayPal and Persado. So I'm excited to have him on the call today, and excited to have him share a few thoughts around some of the things going on with open banking, the progress we've made, as well as some of the things that we're talking about with our financial institution partners and how we're moving things forward despite some of the fits and starts, it seems, in open banking. And we'll talk about some of those as well. So just a couple housekeeping things here. Again, this is an open forum. This is not just us talking. We definitely want to hear from the attendees and participants. So raise your hand or throw something in the chat. We will continuously be monitoring that, and we'll bring those questions and comments and thoughts in. So again, this is an open forum, and we do have a couple polls that we'd love to conduct during this session. If you feel comfortable answering, we'd love to hear your input on those polls. And obviously we'll have Q&A at the end as well. So excited to get going. So let's talk through, open banking. Where, I think there's a lot of broad definitions around it, but Arnav, for this conversation, kind of what we're talking about, let's kind of set a foundation for what open banking is, and kind of how we will frame our conversation going forward.
Yeah, absolutely. I think it's a good place to start. And so I think what I'll do is I'll chat kind of through what open banking is, what it refers to, and maybe talk a little bit about kind of the timeline of open banking evolution. So really, open banking is a term that we've coined to really refer to kind of the secure sharing of consumer financial data with consumer consent between financial institutions and fintechs and other third parties. So, traditionally before open banking, you would sort of log into your, let's say you're doing your taxes, you would log into kind of TurboTax. If you needed to pull data from a bank account or what have you, you would authorize Intuit to log into your account on your behalf. This is traditionally called screen scraping, where they'll go in, scrape your data. But with open banking now, this is done in a much more secure and efficient manner with the use of APIs. So especially in kind of a mobile-centric financial world where we use apps like Robinhood and Venmo, what have you, open banking has really allowed us to more securely and efficiently connect our bank accounts and financial data in a way that's a lot more secure and consensual.
Yeah.
So I think traditionally it's a very interesting landscape in terms of kind of the timeline, I'd say, from kind of the early 2010s to even the mid 2010s, right? You really have screen scraping kind of becoming the status quo of how we connect our financial data. And at the same time, you have some of these what are now open banking leaders such as Plaid and MX starting to enter the scene in 2018, around 2018, 2019, right? The EU actually sets a precedent for open banking with their regulation around PSD2 that really sets the stage for requiring banks to open their customer data and payment rails to licensed third parties via secure API. So not only does this kind of set the precedent for open banking, but it kind of flips a lot of things on its head, because banks used to sort of treat customer data as quite proprietary. And after this sort of EU regulation, data access now becomes more of a legal right for consumers, and the use of API becomes kind of the new norm. This catches on in North America. In 2019 to 2020, we introduced sort of the FDX standard, which we'll talk about in a little bit more detail, but that can be sort of thought of as like the same governance party as maybe the ACH network, not NACHA. And but from like 2021 until now, right, major banks begin their API partnerships with the likes of Plaid, MX, Finicity, and others. Very briefly, right, where we are today is now we've experienced a little bit of flux around the Section 1033 ruling around the consumer financial data sort of protections. And so we'll certainly talk about that as well. But I think that's made recent news as kind of early as this past summer.
Yeah. I mean, it has been interesting to see the kind of evolution over the past decade or so. I mean, I remember being at conferences back in the early, mid 2000s to 2010s, and it was all about PFM, right? And getting all your information in one place. And it seems like that kind of was the wave that was getting consumers like, hey, I don't have to log into 7 different places and try to bring it all together into Intuit or a spreadsheet or whatever, that I should be able to actually have these things happen for me and on behalf of me and the likes. And so talk a little bit about kind of that shift from, screen scraping was the idea. What was kind of what is the hindrance with screen scraping, and why are we evolving beyond that?
Yeah, I think there's a number of reasons why screen scraping might not be the optimal solution for this. And you kind of touched on the first one, which is login management, right? Likely most of us have accounts with a number of different institutions. You have to sort of remember and of course this is the case regardless of screen scraping or not, but you might envision a case where every time you want to connect your bank account, you have to log in with your username and your password. Just from a customer or a member experience perspective, that's very clunky. It's not always a consistent interface or a consistent experience, and it's a lot more prone to error from that perspective. And then there's a security standpoint, right? So screen scraping is generally less secure than an API connection. And so with this sort of FDX standard that's come into flux, right, we've now been able to establish a much more standard and interoperable way to actually connect our data to third parties and other financial institutions.
Yeah. You talk about PSD2 and kind of the European Union doing that. I think, the US is moving through and kind of this Section 1033. It's not necessarily a government mandate, but the idea that opening this access. And let's talk a little bit about 1033. And while it is still in flux, and we can talk through how the administration has kind of lessened some of those regulations on there. But let's talk through 1033 and kind of what that's bringing to the open banking discussion.
Mm-hmm. Yeah, absolutely. And I'll also just preface, right, by saying that I think it's kind of interesting to look at maybe some of those differences with why maybe Europe was able to adopt open banking a little bit sooner than the US, particularly because, right, the US doesn't quite have a governing body around this per se. Like the CFPB really covers only like consumer finance. It's not necessarily a sort of central financial regulator from that standpoint. And so, right, like that's where like historically open banking hasn't quite had as much regulation or central authority, maybe until recent years. And so 1033 specifically, right, comes in as part of the Dodd-Frank Act. It really legislates, right, that consumer financial services need to make available to the consumer all of their financial data as it's being shared, what is being shared, where it's being shared, et cetera. So it really makes the access to consumer financial data a legal right. And with that, it kind of codifies the necessary sort of data elements and the data coverage related to consumer transactions, accounts, and just general customer data as well. So there's a few kind of key requirements within Section 1033. So of course, there's the element of consumer data access. So being able to actually access my financial information electronically in a usable format, eliminating screen scraping, which I think is interesting, right? So this rule also codifies that, you know, screen scraping shouldn't be our standard anymore. We need to move towards an API standard, but also an API standard that is kind of consistent across all of the providers for this type of service. At the same time, it also makes relevant like the OAuth consent flow. So how consumer data is sort of authorized and sets like a standardized protocol around that, as well as really sets the standard for privacy and security. And as I mentioned, those covered entities around the data coverage, but also, right, like what type of actual accounts. Generally, they're depository accounts as well as non-depository accounts that you might have with like third-party fintechs, for example. So really, the reason why this has kind of come back into the fold is because there's been a little bit of pushback on 1033, a little bit of kind of questioning around the kind of CFPB authority to implement these type of rules. And so the CFPB, as of July, actually paused the ruling on 1033. They've kind of said that we'll come back with some new rulemaking either later this year or next. And you certainly wonder how this is impacted by some of the larger financial institutions also coming in and beginning to say that they want to charge for access to this data.
Yeah. Yeah. I mean, it's interesting that this, you know, obviously brought this to the forefront. And a lot of financial institutions think, oh, great, we have 1033, we got to look at this, we got to move this. And it's a little bit more of a lenient, but irrespective of whether this, you know, gets brought back to the table and implemented and becomes the mandate, but what are our financial institution clients thinking through? And some of the things that we've engaged with them around, you know, consumer data access and why this is, you know, to the title of our session today is it's more than just a buzzword. This is actually something that can actually customer member retention, help with, you know, product upsell and cross sell, the user experience and things like that, irrespective of 1033, but just the momentum about how are financial institutions like looking at this and why have we kind of come out with, you know, a blog and really trying to shine a light on this from an open banking perspective.
Yeah, and I think it's a good question. It's certainly a very not necessarily open-ended one, but a very deep question, right? It requires kind of a lot of considerations of a number of different things. But you know, I'll kind of go back to what I talked about around, you know, this has not really been a sort of regulated industry before, or like a regulated sort of protocol or nuance before. And so for a lot of financial institutions, open banking can be kind of a newer topic, especially as sort of younger consumers come into the fold and sort of demand better connectivity between all of their accounts for personal finance management. But I think there's a lot of key considerations as you think about open banking and what 1033 kind of means. I think from one perspective, from kind of that technical perspective, it's, well, how do I get uplifted with these FDX compliant APIs, right? So do I need to integrate with one of the top aggregators such as Plaid, MX, Finicity, etc. Do I need to kind of build these capabilities in-house? Do I partner with one of the actual aggregators? Where does kind of my core banking system fit into this whole ecosystem? And what I'll comment on that very briefly is, right, like a lot of these core systems like Jack Henry, Fiserv, FIS, and others have started to embed the kind of FDX standards into their systems, which is good. But certainly from that technical perspective, right, financial institutions need to start thinking about coming up with that framework and that architecture for FDX compliant APIs. And while what's good is it's not necessarily a difficult process, but it's one that requires some thought into kind of vendor orchestration, capacity planning, things like that. I think from another perspective, right, as you mentioned and sort of alluded to, Steve, there's the member experience side of this. So what does kind of the consent flow actually look like on the user side? What does maybe some type of permissions dashboard or consent dashboard look like? How does sort of opt-out or like revocation sort of work if you were to move forward with like a API first strategy? And how do you kind of relay these changes to your customer base? That's certainly another important consideration as well. And then I think lastly, right, with 1033 being in flux and with some of the kind of commercial model being perhaps threatened, there's certainly an element of being prepared for maybe pricing shifts, right? If large financial institutions start to charge for this kind of connectivity, how do those costs kind of trickle down? And so that's certainly a third element. There's a lot of different considerations with this, but I think I would bucket it under those three to kind of start.
Awesome. Yeah, I mean, we'll dive down into each one of those, I think, a little bit. But I wanted to open up a poll question, just kind of get a level set from the attendees of kind of where are you in your open banking journey today. And so you'll see the poll question up there. Are you looking for your first step? Are you actually building some of these FDX compliant APIs? You've integrated with an aggregator, or even integrated with multiple aggregators. Just take a second and throw your thoughts in there. That'd be great. We're well on our way. Yeah, good. So it looks like, this is you, everybody else is also like, hey, we're well on our way. This is something we have to do. Very good information. One of the questions we'll ask later is, which aggregators you're using. So keep that second question in mind. But so talk a little bit about FDX. Again, this is kind of like Nacho. It's not like a government body, but it's a industry collaboration between financial institutions, technology providers, aggregators, etc. Where are we with FDX?
Yeah, absolutely. You hit the nail on the head there. I would absolutely equate FDX to sort of NACHA with ACH. It's really this sort of consortium of all these different financial entities that have really come together and I think most notably, right, created the FDX API, or really have set the standard for how open banking connectivity should be. So FDX has really, again, it's industry led. It's not necessarily backed by any type of regulatory party per se, but it defines the standard for sort of the API schema. So defining all of the data elements in kind of the same terminology, establishing those schemas in the same way so that across each of these aggregators, financial institutions can generally follow a very repeatable process as they think about integration. And then it also sets, right, the kind of authorization or authentication standard with the OAuth-based security as well as just the common data taxonomy. So FDX has really kind of become that de facto standard for open banking in North America. So not only will it kind of reduce the aggregation or the integration costs between aggregators, but also ensures some degree of like regulatory readiness and compliance, just because from a data and kind of consent standard perspective, things are a lot more aligned.
Yeah. And there's, well over 500 organizations participating in FDX today. So it's gaining momentum, obviously real world experience, live API integrations and data moving forward and the likes.
Right. And I guess what I'll say is, right, I think if you are very new to the space, FDX does a really good job on their website of providing the documentation for what a compliant API should look like. And then if you were to just go on, let's say, the Plaid documentation or the MX documentation, et cetera, you'll see that there's a almost, like a one-to-one comparison between their documentation and how they've said that their API is sort of coded and what their API looks like, and how the FDX standard requires the API to look and what it says it should codify. So I think from that perspective, it actually does a very good job in setting that standard and making things quite uniform.
So getting into FDX or standardized API, bringing that to bear, takes plumbing, right? You're connecting to your core and your ancillary systems. You're standing up API gateways, and you have governance and privacy and audit trails and things like that. Dedicated engineering resources moving that through. This is more than just a plumbing exercise. We talked about this before, but talk a little bit more about that consent experience and how financial institutions are thinking about enabling consumers so that it's not scary for them, right? This is my data. I'm bringing all this information. How can somebody hack it or bring it through? Or how financial institutions really kind of gotten that experience out there and really driven consumer confidence, if you will, and driving that financial literacy and understanding that my data's here and I can be able to move things around and have a holistic picture and really drive loyalty to those financial institutions that are driving that consent experience, if you will.
Right. Yeah, I think it's a great question. There's certainly a lot of things to consider. I would go so far as to argue that one of the first things that is really important to bear in mind is like use case, right? So, different financial institutions might see that their consumers have different use cases, whether that's, using open banking / connectivity sort of infrastructure for consumer payments or for lending payments or for personal finance management or for investment or just for pay by bank, right? There's a slew of use cases that exist. And I think having an idea of what your consumers are using connectivity for is like a really good place to start, because then you can start to maybe map or prioritize and look into which of these aggregators do those use cases best. Because, as we'll kind of discuss, a lot of these aggregators have different strengths. And while maybe Plaid and MX are kind of top of market, there's certainly some nuances that kind of go behind the scenes. And then behind that, to your point, Steve, there's certainly a lot of other considerations from a technical and an organizational perspective. So I think from one standpoint, there's kind of a data inventory and mapping exercise that needs to be undertaken. So really understanding where account, transaction, and just general customer data sits within the organization, how that kind of maps to what I've called like the FDX schema or the FDX sort of objects, and really just understanding where this data resides and how it flows from maybe one system to another. Mm-hmm. I think at the same time, right, we talked about this, but architecture. So building the API gateways, whether that's partnering with the aggregator directly to stand that up, or using kind of core banking capabilities to try and enable that, or using your own type of orchestration layer to build these secure API gateways and the actual authentication gateways and the consent management gateways to actually enable API connection. Certainly there's that governance standpoint to it, right? So defining policies for member data access, but also kind of that permissions dashboard, revocability, etc. And then I think from like an internal organizational standpoint, right, there's certainly like a capacity planning element of this as well. So I think generally our experience has found that dedicating 1 to 2 full-time engineering resources towards open banking efforts has generally been a kind of wise investment in terms of sort of time, time to market, and just general implementation timeline. So I think those are all pretty important considerations, but yeah.
Awesome. Just take a quick break. Again, remind folks that if you have any questions, feel free to throw them in the chat. Happy to bring them kind of into our conversation here as well. Talk a little about, so you talk about engineering resources and things like that. What's been the ROI? I mean, every time we talk about new technology, well, what's the ROI? Why should we do this? And what's kind of been the positive effect and some of the, whether quantitative or qualitative, of moving towards this initiative and really empowering consumers to kind of have this? And what are some banks seeing from an ROI perspective?
Yeah, no, it's a great question, and I think there's a number of ROIs from kind of the qualitative perspective. So from a quantitative perspective, I don't quite have figures with me off the top of my hand, but at least from a qualitative perspective, right? And we alluded to a few of them, but the first is kind of security. So, screen scraping is a very inconsistent experience. It's prone to errors, it's prone to security fraud, etc. From that perspective, using an API-based approach can help organizations cut down on things like support tickets, general kind of inquiries about like latency or lag, et cetera, as it pertains to like mobile banking infrastructure.
Right.
I think secondly, right, from a member experience standpoint, now consumers have a lot more trust and a lot more anticipation in terms of what to expect. So with everyone sort of using a mobile phone to connect their different financial experiences, call it, you can now be pretty sure that you're always going to kind of see, for example, that Plaid screen that asks you maybe one click, you can connect any of these financial institutions. It's a lot more of a seamless experience, and it gives you a lot more optionality with kind of that revocability that I talked about earlier. And I think what's interesting as well on that point is, right, like very rarely will you see, for example, like a Plaid interface on like a web browser. You almost always just see it on your phone. And so I think from that perspective, right, this technology is a lot more sort of suited to how you and I interact with banking, third parties, financial data, just in general. So yeah, I think at least from those two perspectives, there's really a strong kind of user experience and efficiency gain. And then I think I'll also just say, right, like from a regulatory standpoint, again, using these aggregators that comply to this FDX standard that's publicly available on a website, documented, et cetera, certainly helps sort of cover your bases in terms of any sort of type of like regulatory risk landscape, especially as things potentially change down the line.
Speaking of those, Victoria, can you bring up the last polling question? We wanted to get a sense, in the first one, you said you've integrated or you're integrated with multiple. We'd love to get a sense for which ones. These are kind of the ones that we've seen as kind of dominating the market, and been working with clients to do projects to help them integrate with some of these. But if you could just kind of put your thoughts in there, and again, this is multiple choice, so you can do multiple ones. But we'd love to see kind of how that's playing out with the audience. Plaid and MX. Yep. Not a surprise. Interesting. Cool. So talk through, as you think through this, what's kind of what's the future? I mean, we're in this stage here, but we're starting to see probably the most newsworthy thing was JPMC saying they've negotiated their agreement with Plaid, and talk through kind of the pricing issue, the pricing discussion. You mentioned earlier that financiers like, look, this is our data, it's protected, and we need to do that. But the consumers like, yes. And so from an ROI perspective, can a financial institution actually charge for this, if you will? Can you talk about how financial institutions can be thinking through that pricing issue?
Mm-hmm. Yeah, it's certainly an interesting topic right now, one that I certainly probably don't have all the answers to, just quite transparently, right? But I think what I can say is I think, some of those steps that we talked about to prepare in a time of uncertainty still hold, right? So thinking about the data mapping for being FDX compliant, thinking about how to actually enable that FDX architecture, standing up those API gateways, thinking about the governance elements, dedicating the resources and doing that kind of capacity planning still sort of holds in a time of uncertainty. Now, I think between this year and next year, we'll sort of get some more clarity on 1033 and how changes to that are actually made. I think my perspective would be that I have a hard time imagining that some of these provisionings around kind of consumer data being right a kind of legal right. I have a hard time believing that that sort of gets revoked. But it's also interesting because you have these institutions like Chase sort of threatening to charge, while FDX and 1033 really try and establish sort of like a free banking system from that perspective. And so it's really difficult to see how that sort of plays out. Again, my personal perspective is that I have a difficult time seeing some of these things get revoked per se, but it's been paused for a reason, and so certainly there'll be some type of amendment down the line. But I think in either case, right, we have a number of clear sort of top players, especially we saw on the poll just now, Plaid and MX clearly lead the way, probably maintain the lion's share of sort of consumer logins, and that might continue to be the case. But I know that there's kind of a question here in the
I was just going to ask if you can kind of address liability from that perspective.
So just to kind of read that question out loud, if a third party has a data breach or worse, starts to sell the data that results in some financial loss, the financial institution still has a liability to its customer, despite maybe not having that contractual relationship. So that's interesting. While my experience around this topic is a bit limited, I think one thing that we've found to kind of recommend to our clients as they go into sort of partnering with an aggregator is to have these sort of SLAs set up. So to kind of maybe address some of these topics. So as you kind of think about aggregating with a Plaid or with an MX, et cetera, it's very tempting to kind of jump into that relationship, especially because they provide these services for free. And And you know, they even sweeten the deal a little bit because they kind of provide you with some of their own technical support staff to really help you uplift the API integration, especially because they have the incentive to do so. But you know, we've really encouraged financial institutions to think about sort of the kind of contractual relationship, that sort of SLA agreement, before moving into an actual sort of partnership, to whether that's simply to integrate and that's it, or if it's kind of to participate in some of the value added services that these aggregators also provide.